Hey guys, thank you. Yeah, very happy to have Chris Vermeulen joining us from the technicaltraders.com today. This is a guy with 20 plus years experience looking at the markets from a technical aspect. Going to talk a little bit about this environment that we're in currently. I mean, it's been just a wild ride, obviously, over the past couple of weeks. Chris, also a frequent contributor to Seeking Alpha, which I'm sure many of you are aware of. There he is. Chris, good morning. How are you today?
I'm good. Thanks, Brandon. Good to be on the show.
Fantastic to have you. I appreciate your time today. I mean, obviously, busy markets, to say the least, very volatile conditions. Let's start from the beginning. We'll jump into a little bit of background. Tell us about how you got started in the business and maybe a little bit about the technical traders as well.
Sure. Yeah. Well, I got interested in the stock market in high school. There was a finance class and there was a local stock market competition, and I was 16 then, and that's when I learned over one semester you could turn, $100,000 account into $200,000 or $300,000. And of course, after that, I was addicted. Who wants to go work for someone when you can just trade, from your computer? So that was my passion from day one in high school, and I traded all through college. And my roommate helped me build a website after I started to learn how to trade, and one thing led to another, and I became a technical trader. I fell in love with following the charts, and I've traded it all through the years. I've done currencies and fundamental analysis, options, you name it. And I just found my sweet spot with trading indexes, the commodities, and swing trading, and all based on just technical analysis.
It's a great story. I love the fact that you were able to kind of hold on to something that kind of triggered you into success very early. A lot of people struggle, obviously, finding what works for them, and we talk a lot of time on the show about having to try many different aspects of trading and many different instruments in trading. But it's a great story to talk about how you were able to kind of grasp on to looking at the markets from a technical aspect, and that worked for you from a very early stage. Let's talk about the technical traders. Tell us how that started.
Well, yeah, so the technical traders, really, I wanted to be able to share what I was learning from the stock market and help other traders. Back then, I was doing actually more of a forum and a chat room, and it's just fun trading with other people. And I think that's why your show is so well. I mean, you guys are nailing it this morning. It's way more fun to be talking with others and to help others and for them to give you ideas and trade together. So, I started in 2001. I started a trading website sharing my thoughts and analysis and trades. And it just built and kind of blossomed from there. And since 2001, I've just been refining my trading strategies, my systems, and custom indicators and tools to make trading a lot easier. And I found my niche. And so now what I do is every morning around 8:30, I do a video on the markets. I talk about what happened yesterday, what happened in overnight and pre-market, and what should happen today, what to expect. So if we're in any positions, we should be on alert if we should be moving our stops up or looking to take profits or both. So every morning I'll recap on the major indexes, the major commodities, and it's an 8 to 15 minute video each morning. So subscribers will get it before the opening bell. And they walk into the market knowing if we're going to have a huge gap or how to kind of take the markets without getting emotional. And that's what the biggest thing is right now is emails are flooding in. People just love the morning video because I don't get wrapped up in news, and I just come at it straight as the markets, how they move, what to expect. And that's what really settles people's minds. Yes, we're having some crazy moves, but this is how the markets always move. Just because they're moving bigger percentages doesn't mean the game has changed at all.
Yeah, I want to jump into your approach to the market here in a second. But for somebody maybe sitting at home, a retail trader who's in that stage where they're yet to find their way when it comes to how they approach the market, what type of information do you offer? What type of you mentioned technical analysis, some indicators on the website, but what can people expect from the technicaltraders.com?
Yeah, the core what I do is. If you want to learn to trade, this is really a great way because I explain what the markets are doing, why they're doing, and I do that each morning. So you get to look over my shoulders and you see why I'm doing what I'm doing, why the markets are bouncing and falling at certain times. The key of what I really provide not only is the analysis, but really it's the trade alert. So every trade that I do, I share with subscribers and followers, and I give them everything they need, from the entry price to the first target, second target, trailing stops, and I keep them updated throughout the day, and I send out updates for the trades via SMS or mobile app. So somebody who's just getting into trading, you don't need to know anything on the markets other than have a brokerage account. And as long as you can place the trades and just follow what I'm doing step by step, it is really a simple strategy. And the videos allow you to learn and start to grasp things. And over time, you'll be able to spot your own trades and be able to, feel comfortable in the markets, knowing you're not just going to blow your account up one day, because I really focus a lot on risk and position management. It comes down to position sizing, especially in a market like this. If you don't have a trading strategy and you don't know how to manage volatility and positions, you can't stick to trades. I mean, this is a bloodbath for most people.
Yeah,
I want a simple game plan.
Yeah, I want to talk about risk management here coming up. I mean, it's changed. This is a different market that we're in entirely since even a month ago. On a broad perspective, let's talk strategy a little bit. I mean, you don't have to give away everything here, but tell us about your approach to the market. On a broad basis, what are the instruments you're looking at on a daily basis, and how do you approach trading on a daily basis?
Right, so what I found works with me, I mean, every individual sees the market in a different way. They all find their sweet spot in the markets. My sweet spot is I focus a lot on the SP 500. If I know where the SP 500 is likely to move, then the rest of the market seems to fall into place. I'll know whether to be looking to day trade or be long equities. If it's in a downtrend, I'm looking to either be long bonds or look for safe havens that are outperforming. I really stick with a swing trading mentality, looking for trades that last 3 to 30, 90 days. It really depends on the market condition. The key here is I just focus on the swing trading kind of aspect of things, and I'm looking for these short-term moves in mostly the SP 500. And when the SP 500 is showing signs of weakness, that's when I start to move and look for potentially utilities, gold miners, or gold itself, or bonds. And that's what we saw in January, February, was the gold miners and bonds were actually, and utilities were outperforming the SP 500. And we played those moves to the upside when we got out of equities as they started to roll over, and we caught the big pop in bonds. We got out at the top for gold miners. We would have taken a beating if we didn't have any rules in place, but we made a lot of money and our accounts are sitting at new highs, simply because position management, you have to know when to get out. You need to be able to raise your stops and get out of winning trades. When they look really good, it's usually the move is pretty much over. When
you mentioned swing trading there a little bit, give us a quick perspective of what kind of time frame you're looking at. Are you the type of guy that'll put on maybe a day trade but then hold a core for a 2 or 3 day move?
No, I focus on, I want people to be able to trade from anywhere in the world and be very relaxed. So I'm only looking for 2 or 3 trades a month. That's it. I focus on very slow moving commodities like the indexes or gold or potentially miners, although they're not slow moving right now. And I try to only have 2 or 3 positions on at the maximum at any given time, but I trade a larger percentage of my trading portfolio because I'm in these more conservative indexes in sectors that are moving versus individual stocks. So more or less, when I get into a trade, our TLT trade, it was January 12th or something like that, and we got out February 20th. So you're looking for a month or two for a lot of these trades. Some of the trades will only last a week or two, but I don't do any day trading. I want this to be that people can come home, watch the video, or get the alert and enter the trade the next day and know they're probably good for a couple weeks. So it's not an active day trading. It's just trying to grow our account. 2 to 4% on the entire account every month is the goal. And it may not sound like much, but that adds up to a really good return for a very kind of passive trader on the side.
Obviously, we're in a different environment. We've been talking, obviously, increased volatility, increased ranges. How has your approach been forced to change during this, last 2 to 3 week period?
Yeah, so really, you've got to tone back your trades. If you're a swing trader, to me, we're standing out of the market. We're watching this. We took advantage of the first market collapse where we were out of the market, but we caught the move up in bonds. And now we're sitting in cash for the last week and a half, 2 weeks, simply because the market is very random in terms of swing trading. And you look at some of the sectors like gold miners, They dropped 25% one day, up 20 the next, up 20 the next. Yesterday, they dropped 15% in 10 minutes. So this is a market where if you're not day trading, you're more or less throwing a dart at the board, hoping the next day's big move is in your favor. So right now, it's all about if you get into a trade, small position sizes, don't be using any extra leverage, don't touch it 2 times or 3 times ETF. You really have to just dabble this at this point. And I'm hoping in about a week, the markets are going to clear up. But next week, I think there'll be some new great swing trades. So I think this downward shift is coming to an end, but it's still a big gamble for swing traders. 10, 15% moves a day is not something you want to risk your money at. As day trading, what you guys are doing, I mean, this is heaven. This is unbelievable time.
Definitely. We live and breathe on volatility. When it comes to somebody, I mean, the $1 million question floating around right now with everybody at home specifically, you're sitting there with a retail account, you're not hearing any of this advice. What do you tell somebody as far as a risk standpoint goes from a retail side of things? What do you tell them when it comes to these types of market conditions?
Well, I'm pretty much telling everyone it's not a time to be swing trading, because most people who come to me, they're looking to be a passive trader or an active trader, but not looking to put out a lot of trades on a weekly basis. So right now, we are really just sitting back waiting for the next key trade setup, which I think there's a couple unfolding next week. And this is gambling right now. If you don't know what you're doing, even if you know what you're doing, this is gambling right now. As a swing trader, you don't want to be holding over a weekend or even overnight at this point. So, sit in cash, learn about the markets, get comfortable. I mean, if you watch my morning videos, your videos, you get a really good feel for what's going on in general. And that's the key, is you got to get comfortable with this current volatility level. Everything's super heightened, and now everyone just has to get used to this high vibration, this fast moving market. And then you kind of scale your trading to work with that and start to scale it into this market as the volatility starts to fade. I think there's going to be some amazing opportunities, but you got to see on the side if you're a newbie.
Absolutely. I think it's a great point to make. I mean, now's not the time to be putting on, anything that you can't handle when it comes to risk, I guess is a good way to sum it up, because the downside is, nobody knows at this point as far as the downside is concerned. Let's talk about the markets. I mean, we showed the chart there of the ES a little bit earlier. Maybe we can go back to that. I'd love to get your thoughts on where we are in this market right now. And I mean, you kind of mentioned it there. I think we need to see a little bit of constructive, maybe range-bound trade for a little bit before we start moving directionally again. Yeah,
well, the SP 500's had a pretty good plunge, and it's at a really significant support zone. Now, that chart that you showed, it goes back to the 2018 really sharp V-shaped recovery kind of low. It's a standout. That one there is my 30-minute chart, and it shows my analysis of what my analysis is doing. Green means we're in an uptrend. We should be looking to buy. Day trades should be long trades. You should be looking to swing trade stocks to the upside. Obviously, when you get orange, there's a trend reversal, and when the trend is down, obviously you're looking to potentially get into bonds or inverse the market. But more or less, the stock market right now is struggling. It's at support. It's trying to find support, and hopefully we'll find a bounce off this level, because I think the market is primed and ready for a big knee-jerk reaction. And I think the close today will be really important. It's a weekly bar. Big money investors are looking at weekly charts, and we want to see if there's going to be a big, huge wave of buying going into the close, or if everyone's going to panic and dump their positions going into the close because they don't want to hold it. And I think a lot of what next week brings is how this week is going to close. I mean, we're testing down. We're still really low. The markets could break pretty ugly. The SP 500 has been trading sideways for 7 days or so, and it's a consolidation pattern at this point, and the trend is down. It could get really ugly. I'm looking for about a 15% drop or a 15% pop, and it's going to happen in 1 or 2 days, and that's why it's gambling right now. It's a huge, unpredictable time frame.
Yeah, that was kind of leading me into my next question here. We were talking a little bit here on the floor in the pre-market about, where a almost fair value level would be in this market right now. If we get that bounce to the upside, is there an area that you're kind of looking at as a potential target to the upside?
On the SP 500, I'd be looking, it's a big range, still somewhere between 2,800 and 3,000 on the SP 500. If we do bottom and the market does start to rally up to those levels, then I'll start digging in and looking for some key areas to be pulling some money off the table once it does. But I think the market is primed and ready. It hasn't reversed yet, but when it does, it's going to pop. It's going to be a huge short covering rally. And of course, as you know, some of the biggest rallies happen in a bear market, if you want to say we're in a bear market. So this is going to be one huge move that comes next week. And the question is which way. And 28 to 3,000 on the SP 500 is going to be a major level where the market could stall and top out, and 6 months from now could roll over, and it could be the first real down leg in a bear market.
You mentioned the TLTs a little bit earlier. Is that another market you're looking at right now for a potential move either direction?
Yeah, TLTs, they had a beautiful breakout from a pattern, a long-term chart pattern. And we played that move. That's where we got about a 20% gain over the last month and a half. And it, of course, spiked as the stock market started to break down. And right now we're looking at the TLT hit support. 2 days ago, it had a 100% measured move, moving down on the chart in a nice ABC correction using Fibonacci extensions, some really simple technical analysis, but it works phenomenally well for pinpointing target areas to take profits and support zones. And it hit that a day and a half ago, and it's had a very strong bounce off that level. Right now, TLT, I think it's going to do well going forward. It's now cleansed itself with this drop, and we're looking for it to stabilize. I think there's going to be a lot of fear creeping into the market for a month or two, and that fear is going to just keep seeping into bonds, and it's going to create an upward move slowly in bonds. I also think the stock market is going to rally going forward with it's just oversold. So I think there's potential on both of them. There's the chart of TLT, and you can see this last zigzag move. It was a 100% measured move as of 2 days ago. And of course, we've got a sharp knee-jerk reaction bounce. And that's the sign. Once you hit a 100% measured move, that's the sign something serious is going to change. So I think bonds are going to base here, and they're going to be another opportunity to the upside.
Great stuff, Chris. We appreciate your time. Before we let you go, we have a couple of guys over at our trade desk who want to ask a question. Here's Sean.
Sure.
Hey, Chris, yeah, thank you so much. I tweeted it out that you're on our show. Thank you for coming on. And it's great to look at a longer time frame, like you're mentioning there. We, unfortunately, are at a prop firm. We don't hold overnight, so that's why the restriction on this one. I did want to talk to you about averaging in to a position. Is that something that you and your clients, your subscribers, I guess you more specifically, talk about at all? Do you ever average in? I know there's a lot of traders that don't like to do that. I mean, I have a perfect example here on Square. If you can go to the screen. Yeah, I mean, if I can blow this up here. We take this short, breaking down here, comes up, we average in, then take the rest of it out down here, and now we see it falling down. Sometimes averaging in can be the saving grace for traders, because you're not always going to pick the exact spot, but also on the flip side of it, it can also be to your detriment, because if you're wrong, you're just increasing the risk exposure that you have. And again, not every single idea that you or that me, Neil, Brendan, any of us have is going to be right all of the time. How do you play that, getting averaged in? Do you like to average into losers? Do you average down into winners? Is that part of your playbook?
So I don't average in too often. When I average in, it'll be usually in an asset or stock or something that is very volatile. So if it's got more risk, I'll usually stick a toe in the water at our first entry price, knowing where there's another level down below that we can add some more, and then we'll have our stop layered in be below that. So not too often we average in. Natural gas is one we can average in because it's fast moving. Gold miners at this point, I mean, if you're trading anything that's moving that much, you've got to, I think, average in. But generally, I'm looking to trade gold, the SP 500 bonds, and they move generally so slow that we can put our full position in. And those are the ones that I really focus on trading. So I have a really good grasp and feeling of those, versus when you start to break down to sectors, they move faster, a bit higher of a loss rate, losing rate on trades, just because they can do their own thing versus the tide going up and down. So as risk goes up, I will scale into some trades, but generally I'm playing the tide going up and down, and I'm just rotating from risk on to risk off, and then mixing in between as there's trend changes. So that's how I kind of deal with that.
I just want to jump in here quickly, a little add-on to that question. Is it fair to say, because you have increased volatility, it's a little more difficult to pick the perfect entry point, but you'll only ever get in multiple times if your overall risk plan is not going to change? You just recognize that it's going to be impossible to narrow it down to a particular price because of that increased volatility. Is that fair to say?
Yeah, so when things get really volatile, obviously you might get swung out of it a couple of times, just the volatility. The strategy that I stick with is I let the dust settle a little bit. I'm generally not anywhere near the bottom when I get in. It's already had a nice bounce. I'm usually not out at the top. It's already rolled over and started to move down. And you know, the safe section is that middle chunk. And so I let a lot of the momentum and that noise you're talking about, because I'm a much longer term chart than what you guys are doing, I think, in this case. A lot of that noise has been chopped out of the market, all that volatility during bottoms and during tops. So more or less, we get in and we just ride that whole trend going up, going forward at that point. And sometimes we do have to take a couple stabs at it to get in. It happens. I mean, but in general, the trend is clearly in favor, and other asset classes are supporting that move. And so we avoid a lot of that chop because I wait for a lot of confirmation. I'm looking for the safe middle chunk of the trend versus trying to get in, you know, a little too low or a little too high, shorting.
Thank you. Perfect answer there. Thank you for giving us your time here. I wanted to throw you back to Brendan. I know he has a few more questions.
Sure. Thanks.
Great stuff, Chris. Yeah, we won't keep you too long. Obviously, a busy day, lots to look at as far as the market goes. Just wanted to get your thoughts as a last kind of thing here. Quad witching coming up at the close today. I mean, you mentioned it a little bit. How much do you pay attention to an index reweighting or index rebalancing on a day like today?
I don't really look at it at all. All I need to know is if there's triple witching. I know today could be a little more random price action. There could be some really big swings, and you just got to be aware. You got to be on your toes a bit more because you never know what's going to happen with triple witching. All it does is increase the risk of some trades reversing very quickly in the market. And so as long as I know that I need to be extra sharp today and quick on the trigger to move stops, protect gains, that's the key with triple witching. Just be extra cautious. Fantastic, Chris. Give everyone your social media accounts where they can find you online. Sure. Twitter at the Tech Trader and Facebook at the Technical Traders. Great stuff. Chris Vermeulen, thank you so much. Appreciate your time today. Stay well in this crazy time that we're living in. Yeah, thanks, Brandon. Take care. There you go, guys. Chris Vermeulen from the technicaltraders.com. Great website. Go check it out. A lot of information on their website. A guy, again, who has 20 plus years experience looking at the market from a technical aspect, knows what he's talking about. Hopefully we can get Chris back on the show. Once again, guys, let's go back over to the desk.